Afternoon, folks. Mayuresh Joshi, Head of Research at MarketSmith India. Today is a Monday, and we are back with our series, the weekly report that we carry every week. Very interesting stuff that we've got out in our weekly report. But outside the weekly report, what really transpired was Trump's threats to European countries related to the takeover of Greenland, and therefore he has imposed tariffs on a whole host of European countries. The European Union is giving it back. They're saying no, there is no chance that Greenland will probably go to the US at a fee or otherwise, and therefore there might be some element of a counter coming the US way as well. Obviously, I think outside that, in this week itself, the World Economic Forum is meeting at Davos. There is going to be a US team, US politicians coming out there, global politicians, and therefore I think how this entire macro development when it comes to geopolitics gets resolved is going to be very, very interesting. Why interesting? Because the fear factor that has probably set in for geopolitics, specifically for our markets in terms of the corrective measures that we are seeing, whether it's the Nifty or the broader market, as well as expectations in terms of what probably comes through in terms of the trade deal with the US over the next few weeks. Let's not forget, we've got a budget to comprehend in exactly 8 trading sessions from now. And therefore, I think the next couple of weeks, very, very critical from a market standpoint, from all these aspects to put together. However, for the week gone by, what has stood out very, very interestingly, and what we would like to discuss through our report is very interesting facts that have probably taken place. And as always, you probably have to go on to www.marketsmithindia.com. You have to visit the research tab and you have to press reports. The report right on the top is the report that I'm talking about, the weekly report that we are discussing right now. Interestingly, I think as a market construct outside the events which are now shaping up, a couple of sectors which are still standing strong are Nifty, banks, in fact, banks as a pack as a whole, specifically the PSU banks, and the metal index. The metal index rally continues unabated. What is happening in terms of geopolitics has had an even more positive outcome on silver prices, gold prices, copper prices, zinc prices. Therefore, base metals with precious metals continue the rally. Banks, specifically PSU banks, outstanding set of performances compared to the larger pack. ICICI Bank got hit because of the excess provisioning that it's done on its agri portfolio. But again, I think the management is making it clear that it's a one-time hit, it should not repeat itself. And in fact, they are very, very aggressive in terms of following the RBI directive and ensuring that this probably gets recovered and resolved in a timely manner. However, I think the street is probably not taking that at this point of time, along with the weakness in the market. Realty and FMCG, as mentioned in the report, remain in a correction phase, while consumer durables is showing a tentative rally in terms of certain leadership stocks within that space. Expected to show some element of resilience. Now, in terms of our O'Neill methodology, buying breakouts and good breakouts at that, where the RS rating, EPS ratings are good, institution holding is superb, the ROEs are top in their class as we speak, with a finite loss that is probably attached, the 7 to 8% rule that we probably apply in terms of our entry point from key pivot levels. Is to be followed very, very diligently in these markets, and you need to be very, very selective in terms of the volatility that the market is probably giving in. Reasons, right? Why banks, as I mentioned, are doing well. Obviously, I think the net NPAs have come down from 14.6 in FY18 to an absolute all-time low figure of 2.83% as we entered quarter 2, and quarter 3 numbers so far for a whole host of PSU banks are probably looking even better as we speak. Capital adequacy remains strong, ROAs or ROEs remain extremely well placed as well, and therefore I think we've carried this in terms of our featured article as well. We've got 5 stocks to cover, which is carried out in terms of the rationale for all these 5 stocks, which are now just scrolling through. And a few stocks out of these, as a clear disclaimer, we might be holding in our portfolios, either the MSI portfolio or the swing portfolio. In terms of our spotlight or the filter that MSI has, industry group rank is very interesting because that gives you a sectoral perspective in terms of how sectors are probably positioned from a week's perspective, 1 month, 3 month, 6 month perspective, giving you that absolutely front end advantage in terms of how sectors are probably moving up. And as I mentioned, the opening page of our weekly report covers precisely the fact on how sectors are probably placed. Now, one of the stocks which we've carried, and as a learning curve, like we always discuss, and this is supposed to be a learning example in terms of how O'Neill or growth investing probably happens. Don't need to discuss the fundamentals very much of BSE. It's a platform, it's an exchange. The annuity business is very, very strong. The subscription business is expected to remain very, very strong as well. And therefore, I think the expectations of the transactions happening on the exchange expected to increase multifold as the number of demat accounts increase over the next few quarters makes a base case scenario. From a rating and ranking perspective, the EPS ratings are superb at 97. You can't have better EPS ratings than these. RS ratings are extremely robust and strong at 88, and the buyer demand seems to be very strong as well. In terms of the placement itself, as you can see as I scroll down the chart in terms of the technical parameters, it's forming a cup with handle, a stage 2, with the pivot at 2960 levels. The cup with handle has a length of 151 odd days, which means it is actually trading in this range for almost 7 to 8 odd months. It is creating a nice and a decent structure as we speak, and therefore keeping this stock on your radar in terms of this stock as it approaches the pivot over the next few days or weeks becomes extremely pertinent. So folks, here's what our presentation was for our weekly report. But for more updates, for more learning articles, visit www.marketsmithindia.com.